Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES continued to balance within yesterday's range. And at this point, heading into the open, we have key resistance at 77 to 79.5 and key support at 65.5 to 68. Our short-term bias continues to be neutral. And as far as the catalyst on the day goes, we have consumer sentiment out at 9 a.m. Central Time. And then more importantly, we have Yellen's speech at 9 a.m. Central Time as well, and there could be a response in the market based on her remarks. So there could be a pickup in volatility. We'll have to see how the market responds to her talk at 9 a.m. And keep in mind that this is not a econ event, so there's not going to be any flurry of activity right at 9 a.m. Central Time, but it could happen at any time throughout her speech. On the downside, a break below 65.5 to 68 would mark a breakdown below a 3-week balance area. So that would indicate sell side in control and bring 59 to 61 into play. Now, 59 to 61 is a larger time frame area of support. We have a key high volume node there at 60.5, open gap, naked VPOC. So we have a confluence of support at 59 to 61. So on first test, we can still expect responsive buyers to be active. And after that, it'll depend on whether ES is able to get back above 65.5 to 68. So we'll have to see whether the response off of 59 to 61 can take ES back into the current 3-week balance area. And if ES continues to reject and fail at 65.5 to 68, then it would be a confirmed breakdown, and it could lead to even lower prices down to 54 to 55 and eventually even 49 to 51.5. So right now the market is at a important inflection point where how it responds to 65.5 to 68 is really going to tell us whether this bullish environment is going to continue to be intact or whether there is now a shift taking place and the control is shifting over to the sell side. On the upside, the main area of resistance is 77 to 79.5, and a breakout above that area would signal strength and buyers still in control. So depending on how we're breaking out above 77 to 79.5, if it's a high volume, high momentum breakout, then we could quite easily tag 83.25 to 85.25, fill the gap at 85.25, and even tag 87 to 88. So a breakout above 77 to 79.50 would just confirm that the current bullish phase is still intact, and if that happens, then the market doesn't have to stop at 85.25. We could quite easily tag 87.88 and potentially even 89.5 to 91.5. Now, first test of 87.88 and 89.5 to 91.5 will likely still get a sell response, if nothing else, just from profit taking at the highs. So we can still expect some rotation and a response at those resistance areas at 87, 88, and 89.5 to 91.5. But right now, heading into the open, the short-term bias is neutral. It can really tip in either direction, so we are going to have to monitor the market in real time and then determine whether we are seeing sufficient strength in order for a breakout or enough weakness in order for a sustained breakdown. And depending on the response at 9 a.m. off of Yellen's speech, I think that's really going to set the tone for the day. So those are the main ideas. Let's see how the market responds to initial support, initial resistance. That's really going to answer that bigger question on whether the buyers are still in control, and we'll take it from there.